Matthias,
Hello.
good afternoon.
I
All right, sir.
cannot hear you.
Okay. And, all right, I'm going to up my volume a little bit.
Nope, but can you hear me?
I can hear you great. Yeah, very good.
Hmm.
All right. Yeah, thanks so much for jumping on. Appreciate you making the time. Where are you calling in from right now?
Oh, hang on.
Oh,
Oh, there we go. That did it. Can you hear
okay.
me?
Yes, very well.
There we go.
Yeah.
Okay, cool.
Where are you calling in from, Matthias? And I need to
I
pronounce
live
your name
in
correct.
Matthias, and I
Matthias.
live in Destin, Florida.
Okay, no problem with this latest snowstorm that hammered everybody else here, including
No,
us.
no. I mean, I guess just a little. I'm way west in the Panhandle.
Oh,
Um, so there is it's cold. I mean, it got down into the 20s last night, but
ooh,
no precipitation. So we're other than my sprinklers, which I forgot to turn off. So we do have
okay.
icicles in the yard, but that's
Oh
my
my.
fault.
I was just talking with a land broker down in Dallas, and yeah, they're just starting to pull out of it now. They've had what 3 or 4 days of solid
Mm.
ice, and oh well, we just have snow up here in the Northeast, even though my video or visual behind me shows San Francisco, uh,
Yeah.
because I liked that. I just liked that shot, I guess. But we were digging out. We had about 18 inches up here in New Hampshire, where I
Ooh.
am. Yeah, definitely snowman time for my daughter. So, anyways, yeah, thank you very much for taking the time here on this. And
Sure.
so, yeah, I guess briefly I can go over where this is headed right here. You're the CEO, managing owner of Capital Velocity Investments, and you focus on multifamily real estate syndication,
Hmm.
and you help investors build wealth without the landlord focus. So they
Sure.
don't have to do that. Yeah. Okay. And yeah, I appreciate you taking the time here. So you were on your Substack there, Matthias Talks Investing, and you
Hmm.
you kind of break things down into very understandable, you know, processes that go on, and do it in a very investor friendly way. Um, that's just what people want to hear. Now, if you've a lot of people are scared about investing, and I
Sure.
think maybe you can walk people through that and give your take on how to make it an easy process. But
Mhm.
before we dive in and all that, I just wanted to set a few expectations, see, make sure we're aligned here. We'll probably start with your background a little bit, Matthias,
Sure.
and part of that would be I always like to ask, what made you jump in onto the path that you're on? Was it a light
Sure.
bulb moment, or probably we'll get into that a bit. And I kind of have a few official questions, but they're not really. That's the wrong word to use. It's just to kind of guide things along. Feel free to jump in. It's a two-way conversation.
Sure.
That yeah, it's yeah, and that's usually how it comes out best too. So we'll probably ask a bit about what you're seeing in the market right now,
Hmm.
and where it's headed, and what you are focused on growing or solving this year in your business. And at the end of it all, if it makes some sense, we can talk about next steps or possible follow up. But yeah, for now, it'll be a kind of a 30-40 minute look at what you're doing and your leadership style. Um, People love that. People love how you get going in a business like this. And then let's see. We'll send you a lot of Zoom snippets. So when this is all done, and you have full control over it. So if you mention something you really don't want put out there, you have control over this, and we can just get rid of that. Most people it's not a problem, but if you have something in there you don't like,
No, I'm pretty easy. I can't imagine there'll be anything I
okay,
don't want in there.
yeah, and then just use those Zoom snippets however you like, and
Hmm.
we'll put them in your social feed. It's surprising how
Sure.
much business is happening these days from our social feeds. I mean, that's changing things, isn't it?
Very
So,
much.
All right. So with uh, a nice start to things, Matthias, I'd like to welcome you to the show today. And could you walk us through your role at Capital Velocity Investments and kind of what you focus on a day-to-day basis there, Matthias?
Yeah, sure. Thanks. I'm the CEO, owner, co-owner. Wife and I started this about 10 years ago. But I'm the kind of operations guy. So all of our existing portfolio, we have our weekly calls with our property managers and so on.
Mhm.
And then I'm also, I'm underwriting. We're a small outfit still, so I wear a lot of hats depending on day of the week and tax season or not and all that. So, right now it's in January, so we're fully into financial CPA tax season, making sure all of our reporting is done and we're filing our taxes and all that. So a little bit of everything, but mostly I'm in charge of the day-to-day operations and our acquisitions. We're always looking at got our ear to the ground, looking at what's available and trying to grow the portfolio.
Mm, right. Oh, very good. Good. So, how did your background in the Air Force shape the way you approach investing in leadership?
Yeah, so good question. I did 14 years in the Air Force. I flew Special Operations C-130s. I was fortunately stationed only in Florida. I live in Destin, Florida, and I was stationed here in my entire Air Force career after flight school and all that. But
Hmm.
basically, I learned risk analysis very well. You have to in order to fly airplanes. I learned a lot about project management, prioritization, that kind of thing, um, and
Hmm.
really kind of the ability to make a decision without necessarily 100% of the data and move out and get going and kind of adjust as you go.
Hmm.
All of those things were very important for, Air Force career, and then kind of they transferred really well into buying, managing, selling real estate, you know.
Very good, very good. So, what was the kind of magic moment here where you chose to get into multifamily real estate investing? Had you always been interested, or how did that come about?
No, that's a great question. So I've always been obsessed with investing, and I remember the day that I learned what compound interest was, and it blew my mind. I was like 12, playing with one of my mom's little purse calculators. I remember that. But I knew nothing about investing. My parents never went to college, and well, didn't graduate from college. As I say, my mom dropped out to have lots of me and my siblings, I should say. But um, so I knew nothing about real estate investing. I was learning, I had my
Mhm.
Roth IRA with the Air Force and was kind of like, okay, learning about what stocks and, all the investments that were available. But my wife moved down to Florida to marry me and had to kind of start a new career, and she chose real estate to be an agent, a real estate agent. And her
Mhm.
mentor, like, was kind of showing her the ropes of, the real estate game, as it were. Recommended to her that we should buy, an investment house, a single family rental in our local area here. That was just a good deal, and I didn't know it was a good deal. I had no idea. Was
Mhm.
pretty scared of it. They had to talk me into it, and it took a while. But basically, once we bought that house, did a little bit of work to it. We bought it for $65,000 back in 2016, I think.
Nice.
And bought it. It was a great deal. I mean, we put a few thousand into it, refinanced the next year, pulled way more than we pulled like $90,000 of cash. So all of our money was back out of it. We were making infinite returns from then on. We had that. I think we just sold it a year and a half ago. We had it for forever. Did
Yeah.
wonders, and it kind of showed us what real estate is. Being in the Air Force, I was still active duty, so I had to buy more and more and realized that scaling was only going to be possible through multifamily, especially since, I mean, I closed on an apartment complex from Afghanistan with my wife, the power of attorney and stuff back home. So that, I
Nice.
mean, it was going to have to be scaling with intention, and houses wasn't going to cut it to accomplish what I was looking for.
Nice. 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 Okay. Within multifamily, what kind of major shifts are you seeing in multifamily real estate right now in Florida or anywhere else you're interested in here?
Yeah, so um I'm kind of around the Southeast is basically the markets that I focus on.
Uh-huh.
From Mississippi, Alabama, Georgia, Florida. Early on, when I was buying hyper local when I first started out. One, because we didn't have the same environment we're in now. But now I'm looking at, so what I'm seeing in multifamily is I'm seeing insurance. It spiked really bad. I don't know, from 22 to 24, let's say. I'm seeing that start to subside a little bit. It's still
Okay.
lagging in Florida, so it's still really hard to make numbers work in Florida. I'm not particularly looking to buy in Florida, not until I see that insurance risk kind of taken care of.
Mhm.
It's getting better, but it's still not to where I'm comfortable. I can do better elsewhere. So like I'm buying in Mississippi right now, and over there, what I see, same, but more progress and sooner, quicker progress than in other states. But
Okay.
in general, I'm seeing that, we had all the supply that was delivered in 2025, basically in 2024, that was started before the interest rates went up. So those are all finished. They hit the market and rents softened everywhere, especially in the big overbuilt markets, the big cities, the Charlottes, the
Mm.
Orlando, everywhere, Tampa, all these, they're starting to creep back up now, is what I'm seeing, is that the rent growth is starting to come back because there's no more units being delivered. So I do think
Mm.
that right now um, is a great. I've been saying it for months. Is I think this is the time to buy because I think you've got the trailing 12s that show weak rent growth, if anything, maybe even some small rent declines in all of those southeastern markets that are the growth has never stopped. So
Yeah.
the rental demand is there. But the rent softened because of all the supply being delivered. So now you can buy theoretically at a traditional discount to whatever we were seeing prior to the onslaught of all the new supply. And but I think that rent growth is coming right back because it's a black hole of supply after kind of I don't know, first half of this year
Mm.
is when the very last of them are being delivered, if even then. And
Yes.
I think the rent growth is going to come right back because again, people are still moving to Florida. They're still moving to the coast,
Yes.
all in the southeast. And I think it's a great time to buy on kind of a discounted trailing 12 from the previous year of operations, and then moving forward, I think we'll see the growth back.
Nice, nice. So, how would interest rates and capital availability change how investors should think about this year, 2026? What's
I
your
think
opinion on
I, I
that?
think I think what the last, I don't know, since 2022, basically what that's taught us is that uh, operators and like people, syndicators like with me, operators need to kind of remove interest rate from their calculations as much as possible. Meaning we can't count on interest rates to be low. We can't count on them, to basically provide the returns. We can't just buy everything in sight because interest rates are so low. We have to make sure that even with suboptimal interest rates that we can perform on our pro forma basically. And I think
Mhm.
capital availability. I think it's just they're especially with lenders and with investors. They're just much more that so many of them have been burned over the last 3 4 years. So they're unwilling to, like, you're going to have to explain to them why it's a good idea, and that doesn't mean there aren't great deals out there. It's just you're going to have your ducks in a row and be able to explain why it's a good deal better than, oh, hey, everybody's
Mhm.
buying everything and it's hunky
Yeah,
dory and
yeah.
everything's going to continue, the party's going to continue forever, was everybody's statement in 2021 and 22. Well, that
Mm.
that clearly didn't happen. So now you're going to have a real business plan that can be executed in order to attract that money.
Okay, those are more the experienced investors. What mistakes are newer investors, you think, making in today's market? If you were very new, yeah, what's to watch out for in today's market?
Um, I think people are still gambling on interest rates coming back down, which I think they are trickling down, but I don't think they're going to get anywhere near, the early
Mm,
COVID interest rate days. Um,
right.
I think people are still betting on that and not concentrating on uh, the operations and the cash flow of the property. I also think that Uh, e- Everybody likes to flock to the big names. I see beginning investors think you have to go. I mean, think of like Huntsville, Alabama, the Tampa, where everybody wants to go play in these markets because they hear about it. And all that does is that means you're overpaying for almost always. It means you're overpaying for your assets in that space. I think the big mistake is following people, and following the
Hmm.
trends in terms of what you're. It doesn't mean you can't do well and you can't make money. You just have to be selective. As long as it meets your criteria, it can still work. But more than likely, if there's 100 other people trying to do what you're doing in the same place at the same time, you're just not going to be able to get the deals you can if you have a I don't know, a unique strategy or a
Hmm.
certain market that you're really an expert in, you know?
Okay. All right. Thank you, Matthias. So for your company right now, what's working really well for you at Capital Velocity?
Yeah, so right now what we're doing what we're calling lateral scaling. So what I'm seeing is kind of there's a gap in the market on the size of properties that people go after. Your
Hmm.
beginner investors will go after your 8 to 20 unit properties just because they need to build a track record and experience, and that's kind of within their grasp of what they can capitalize,
Hmm.
what they can the money they can raise. And then but everybody's goal is to get to the 150, 200 unit properties, 300 unit properties with the massive economies of scale. And everybody races through the 20 to 70 unit range, 20 to 90 unit range. Um, but I think I've been doing this for 10 years, and I carry a decent amount of weight in a market. If I go after a 40 unit property or a 50 unit property in a market, especially where I have other existing 40, 55 unit properties, my offer is going to be stronger, even if it's lower than a
Yeah.
lot of, because again, there's a lot of unproven people in that space trying to get up to the higher,
Hmm.
bigger partnerships. And I understand that doesn't mean you can't make money doing that, but I like to be, again, I don't like to go where everybody else is going. I want to be, I can
Hmm.
put together that 200, 250 unit portfolio in a market via adding together 40, 50 here, there, and I can operate it as efficiently. I've got my teams built out, like for instance, on
Yeah.
the Southern Mississippi market that we're buying in right now. I love it
Right.
because I'm getting the economies of scale that you would with a bigger property while acquiring for the mom and pop price, on a little 40 unit, 45 unit, 50 unit, whatever it may be property.
Nice. Nice. Okay. Good. Good. So, uh, what's on the other side here? What's been the most frustrating challenge for you lately? Whether it's maybe deal flow, capital raising, investor education, you name it. What's been more of a challenge lately for you?
I think the challenge is always we're getting really good deal flow. I think it's time to buy, and I think brokers know it, sellers finally know it. So that's going well right now. Um, I, Capital raising has been. I mean, we filled up in our last closing. We filled up our raise in 3 days. So there was no
Well,
issues there. It was a smaller raise, but we were our investors were hungry. I think the biggest one, there's always that list of my investors that I've talked to. We've talked about it ad nauseum. It's just that last. It's kind of the proof of concept is hard to prove to people until they finally, just like we talked about. You're scared to finally move and get into it. So that's it. I spend most of my time, I'd say, on investor education, whether it's social posts and newsletters and podcasting and things like that, just because I know that this real estate investing has changed my life, and
mhm.
the ability to produce generational wealth for people is unmatched as far as I can tell. I've never found anything that is effective in investing. But it takes personal discipline, and it takes a departure from kind of the normal thing that people are taught. Hey, get a company with a good 401k match, and when you turn 60, you'll be set. And I'm like, well, you can do it a lot quicker than that if you're willing to have the
Huh.
discipline and to teach yourself and learn a little bit about how to do a little bit of
Mhm.
alternative, we call them alternative investments in like real estate, and you can build that wealth quickly, and then you can spend, let's say you spend from 30 to 40 building building your wealth, and now you have from 40 to that 60, and then on,
Yeah.
to enjoy the wealth you've built with, your family, kids, what have you.
Nice, nice, nice. Very good. So which metrics or outcomes are you most focused on improving this year? So yeah, with how things have been changing. So in your company, things go up, things go down. There's challenges like any business without challenges. I don't believe it,
Yeah,
So
exactly.
yeah.
You're just lying. Yeah. Um, I think I think the what I really want to improve on this year is just um, my ability to buy and operate more. I'm hiring now
Mm,
some operations help. We're getting to the point. We have help. My wife and I do have managed everything on our own for years. I have another employee now, and he's instrumental in all the podcast and newsletter, all of the outreach that we do, and then all the behind the scenes and all the websites and portals and everything that we use, all the technology stuff that I'm not the greatest at. But I can't. I'm running out of my ability to properly vet every. I don't want to say properly vet. Let me say like what falls off the plate is the less immediate stuff. So I'm always going to
mm,
operate efficiently. We have great track record of operating efficiently,
yeah,
but I might miss out on some opportunities to add to the portfolio if I'm bottlenecked and focused on
right.
existing properties, or even maybe we're buying one, but a great opportunity comes on while we're under contract on one. I'm
Right.
trying to build that bandwidth in our system so that we can if the opportunities are there and they meet our relatively strict criteria.
Hmm.
But I don't want to miss out on opportunity because I was busy. That I don't want to.
Yeah.
So I've been trying to improve my and my company's ability to take on projects as we find them, not at a time that's convenient to us.
Right. Okay. So where do you want capital velocity to be, say, 6 to 12 months from now? What'll be different?
I want us to have, I want to buy 3 or 4 properties this year, in kind of in that, laterally scaling, like I talked about. I
Hmm.
want to have, a couple hundred units in like my Southern Mississippi submarket, that I can operate as efficiently as a one large property. I want to have, um, I want to have a better system for keeping in touch with current and or past investors or potential investors. I just more
Yeah.
often touching base with because we have a really good investor pool and we try to stay engaged. But that's another reason I want we're hiring is to help
Yeah.
make those personal touches with people, because that's so important whenever you know
Right.
asking for money when you need it is a terrible time to ask for money. As the saying
Right.
goes, you need to have those relationships built by the time it's time to pull the trigger. Otherwise, you're going to be in a world of hurt.
Yeah. Yeah. Have it taken care of in advance that way. And so, okay. Wow, this has really been very, very informative here. And for me, like I have a few small investments on the side, real estate on the side with co-living property.
Hmm,
I've actually never seen it. I found out about it and I challenged myself. Well, if this is going to work, I'm going to do this with my computer, with all the supports I can find to do it right.
sure.
And yeah, and it's worked out great. So I've learned about a new asset class, and I've not seen the property yet, but it's running like a top. And
That's
so
great.
I accepted the challenge and I did it. It's just a small residential, but it's now
Hmm.
8 rooms that I rent out in a high demand area. So um, I
Cool.
know technology, um, done right is the key, to keeping things moving
Hmm.
forward. Plus, I've got a manager that lives on site.
There you
That's a
go.
little different than most co-living, and I pay a little bit more for that, but I think it makes it higher quality. But enough of me here. But anyways, so uh, so is there any one major bottleneck in your business today? What would it be? And have you see, this is for younger operators here. I guess they think, you know, if I buy enough buildings, then I'll have no problems. I'm just joking.
That's not true. You'll always have
That,
problems.
yeah. Oh,
Um,
you're one of your biggest bottleneck here, or opportunity. Everything can be an opportunity
I
too.
yeah, I think what operators and people who do what I, especially getting started doing what I do is, I think the key is attention. We have a tendency to kind of put things on autopilot. You have, especially if you have a third party property manager for your properties, you just kind of turn them loose and say, hey, they're executing the plan. It's good to go now,
Mm.
right? But I think that what catches people, and I've caught myself in the past,
Yeah.
at having to remind myself to get back in there because they're just not going to make the same decisions you are on a daily
Mm.
basis, and you need to be monitoring the key performance indicators and all the financials and say, hey, we're spending a lot of money on painting lately. What's going on there? It's like, oh, maybe we need to get
Yeah.
more bids and somebody's kind of upping their prices on us, some contractor that we've used or whatever. All these little things that a property manager, depending on the property manager that you have, I mean, sometimes their whole goal is to just get people to stop calling and complaining. And it doesn't, so if they just, hey, someone
Right.
calls, I dispatch a plumber or I dispatch our handyman to go over there and do it. It's like, well, if if you're not thinking strategically whenever these calls come in, where you're grouping, bundling, hey, we're going to have a plumber come to the site. We have three different drippy faucets that we can have them attack with only one site visit fee or whatever. We're
Mm.
saving across per unit. We're saving a lot of money, and you need to be hands-on enough to know that that's going on. Otherwise, your expense numbers are just going to be higher than they need, well, than they could be, and
Mm.
expense comes right off the bottom line. So,
Mm.
your NOI is hurt, the value of your property is hurt, the higher your expenses are. So, it's just that's something that
Mm.
if you
Yeah.
feel like you get to, I feel like in the past I've gotten to a place where hey, we're humming, we're firing on all cylinders, we've got it stabilized where we want it to be, and the tendency is to want to go to autopilot. But I think you owe it to one if you have investors or to yourself, even if it's just your property that you're operating, you need to stay on top of it and keep asking those questions, keep getting insurance requoted every time it comes, keep doing the work to make sure that you're operating as efficiently as possible.
Right. Okay. Do you have like a preventative maintenance program? And I guess the side question to that would be, where are you finding most of your opportunities? Is it operators that simply just are falling way behind in their maintenance? Yeah, is that one of your biggest opportunities?
Um, Kind of. Most of what I target, and all the brokers that bring me
Hmm.
deals know this, is that I target mom and pop or generational owners who've owned it for a while, who don't spend a lot of time and effort on it, and especially don't want to anymore. They're retiring,
Yeah.
they're getting up there in age, or for whatever reason, it's just kind of this was a side project for tax purposes, and they don't pay that much
Oh.
attention. So yeah, there's always deferred maintenance and things that need to be fixed. But a lot of times, what I find is that if I can't find a property that I'm looking at and I'm specific, I'm running the numbers on it. If I can't find an online presence, like if it's not on apartments.com or there's no pictures of any interior units or anything online. I know that I'm going to be getting a deal that I can raise rents on because they've narrowed without having online presence, they've narrowed their renter pool to a tiny, tiny circle, whereas
Mm.
the whole market doesn't know about it. Only maybe individuals. So I love to target those, and that's a great opportunity for us. Is whenever my management team and I can't find anything about the units online that tells us there's value to be
Um,
to be added.
yeah, there's no online presence or minimal online presence there. Yeah.
Hmm.
Okay. And so you've expanded out into other geographical areas, Mississippi, Alabama, Georgia,
Hmm.
South Carolina, perhaps, and your company is moving forward strongly here. Any
Yep.
parting words you could mention for newer investors? Is it all going to be roses?
No, no, but I think the key I always tell everybody is that I I've had my share of things go wrong on properties. I bought one
Yeah.
3 months before COVID hit, and a hurricane went
Yep.
over right after that. So
Wow.
we've had our share of
Yep.
struggles with properties. As it turned out, we've sold that one 2 years ago, and it did very well. Once, I mean, not at the time, but the
Mm.
business plan was eventually executed, and it did very, very well on it. But I think the key to that is communication. You need to be,
Mm.
we told our investors like, hey, this is what's going on. Here's what we're going to try to do to fix it.
Yeah.
Here's what's, we had, 6 or so renters that just knew that I couldn't evict them for a year, and so they just hung out and, you know,
Yeah.
effectively stole housing. But
Yeah.
it's just, but we were clear with our investors and said, and they stuck with this and said, okay, well, keep doing what you're doing. It'll turn, and it did. And I think the key is
Yep.
communication.
Hmm.
Any time things will go wrong. There's no way to avoid it. But you need to have communication. You need to communicate with your investors or partners, and they need to be communicating the good, the bad, and the ugly. So,
Nice. Nice.
having a plan to deal with whatever adversity is key. But they need to tell you about it, I guess.
Yeah, yeah. So you pick yourself up and dust yourself off, and
Hmm.
then with that communication, keep everything moving forward, because there will be times when something
Absolutely,
unexpected hits, for
for
sure.
sure.
So, all right. Yeah, this has been wonderful here. So yeah, I really appreciate how you share, with practical examples here. Um,
Hmm.
so once we get this all wrapped up on our end here, we'll send you a bit of a shortened version, and then
Hmm.
there'll be the Zoom snippets. So that'll come probably fairly quickly. I'll see if I can get them prepared and sent out at the end of today or perhaps tomorrow. And
Okay.
most people love those, and they're popular. I don't know what that maybe that says something about our level of focus these days because they're people love 30 seconds a minute,
Oh yeah,
but on the really good side is some pretty important things can be stated simply that way, and you've got that gift. So yeah,
I appreciate that.
I'm sure we can pull a bunch of these out of here for you, Matthias, and then yeah, we'll look forward to sending that over and a bit of a summary for you. And then, on our end here, we help out companies also, as far as modernizing the platform and then using all the different types of AI tools here to scale. So we're pretty good at that. And then, we might send you something on that if you're interested. But in the meantime, yeah, you're going to enjoy, I think, what we send you. And look forward to talking to you further. And I know, if I ever get looking around there, you'd be the person I would go to down there to find out more about investing in that area. So
I
yeah,
appreciate it.
yeah, this is really very informative there. So okay, any last thoughts as we'll get this wrapped up here. And
No, just if anybody wants to learn more, I'd say we can send them to. I've got a Substack, Matthias Talks Investing. Like you said, we also do a podcast, weekly podcast there, and then capitalvelocityinvestments.com for the website.
excellent, excellent. Thank you so much, Matthias Wilson, and we will make sure that that's in the podcast.